Hey everyone, Intel stock continues to underperform and investors are asking, what's going on with Intel? Why does it continue to underperform? Now, in this video, I'll review the latest updates from Intel, right from management, and try and understand what's happening inside Intel. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Right, so Intel CEO Pat Gelsinger saying that they reported a solid first quarter, delivering revenue in line with EPS and above our guidance. While the first half trends are modestly weaker than we originally anticipated, we see Q1 as the bottom and we expect sequential revenue growth to strengthen throughout the year and into 2025. And that's what we've been hearing from several semiconductor companies that have reported results so far in 2024, that the start to the year has been slower than expected, but that the back half of the year remains strong in terms of the orders coming in terms of conversations with customers. Demand is strong, it's accelerating, but it's starting off more cautious than initially anticipated, and that's what Intel also says here. Now, Intel is working on some big things and they are updating their lifetime deal value to greater than $15 billion for their Intel Foundry business. And they extended their roadmap with Intel 14A, the first process node in the industry to use high NA or high numerical aperture extreme ultraviolet technology that they purchased from ASML. Now, Intel has notably underinvested in the company over the last several years. It's playing catch-up now, spending billions and billions trying to catch up to the latest technology and also build out its own foundry business. That's where the bulk of its investments have went, and that's where its bottom line is hurting considerably as it spends to increase this capacity and to catch up on the technology. That can explain why the stock price is down so much, is investors are not confident that Intel's investments are going to pay off. Investors are skeptical that Intel can catch up. That's why they've kind of downplayed or they've downgraded the stock based on the selling after these investments. So it'll remain to be seen. It'll be interesting to see how Intel evolves over the next couple of quarters and the next couple of years, whether or not these investments will pay off. But one thing it does have going for it is governments, including the US, are incentivizing these investments. So the timing of the investments, I feel, are very opportunistic. It's a great time to be investing in this category because the government in the US is shelling out billions of dollars to help support domestic production of semiconductors. Now, Intel is the single largest award recipient from the CHIPS and Science Act. It's received more than $45 billion in grants, tax incentives, and loans. $45 billion to support this expansion. So that's why I say it's an opportunistic time. It reduces the cost of expansion because you're getting that government support. On top of this government support to increased capacity, government is also indirectly increasing support for Intel's sales because it is incentivizing companies to purchase from Intel instead of outsourcing that production or purchasing these chips from countries outside of the US, most notably Asia. It's incentivizing governments. And in fact, Intel received a win from a customer that Intel highlighted. You know, one of the reasons this customer chose Intel is to have domestic supply chain, not to have risks to supply chains outside of the US. So it'll be interesting to see. And this is one reason why I've been bullish on Intel stock. Of course, I've recommended Intel stock to start the year, and that investment, that recommendation has not worked out well. It's been one of my worst performing stocks that I've recommended as a buy all year long. And in fact, Intel has underperformed for several years because of those underinvestments. So you can understand why investors are skeptical about Intel stock, because it's been lagging for so many years that investors have lost faith in the company's ability to perform and return capital, and return on investment for shareholders has been weak. Management goes on to say that job number one was to accelerate our efforts to close the technology gap that was created by over a decade of underinvestment. So management acknowledging that they underinvested in the company. They didn't stay up to date on the latest technology, which is critical in its industry. Some industries, you don't have to have the latest and greatest technology. It won't be such a downside if you don't. But in its industry, the semiconductor industry, you really need to have the latest and greatest technology. Otherwise, your competitors will leapfrog ahead of you. And so that's where Intel's biggest mistake has been, in my opinion, is in this underinvestment in manufacturing technology, underinvestment in research and development, and it's showing. But now they've acknowledged that mistake and they're making up for it. They're spending, they're putting money behind it, and it's great timing because of what we saw earlier with government incentives. So now is the time to turn our focus on matching technology leadership with a competitive cost structure. So I like that they're focusing on both sides of the equation here. They're not just trying to be the best capable in terms of technology. They're not just trying to reach tech leadership. They're trying to do that with also competitive cost structure. So they're trying to have this both-sided equation, because really that's what generates returns for shareholders. Not only do you need to have the best or near the best product in this industry, but you got to be able to provide it at a competitive cost structure. It's the difference between revenue and cost that delivers profits for shareholders. And you've got to think of that both ways. And it's reassuring to investors that within these billions of dollars of investments that Intel is making, they're considering cost as well as tech leadership. Now, Intel for several years has been overly focused on cost, and that's why they've fallen behind on technology, because they didn't want to spend the money to keep up with the latest technology. And so I would say, as an investor, if you were an investor in Intel stock, you would be happy with the company with the latest spending, the increase in spending, because that's where it was lacking before. So that you're happy to see the company now willing and able to spend on this next generation technology, of course, supported by government incentives. The timing of it is working really well. I wouldn't be too worried about Intel's cost structure. In fact, they've implemented billions in cost savings just in the last couple of years. So they're good at that side of the equation. What they've been lacking is that investment in the latest technology. So I'm happy to see Intel finally investing in this technology. So this can kind of explain what's going on with Intel, why the stock price is down. Investors are not confident that the billions of dollars that Intel is spending in this next generation technology is going to pay off at a reasonable rate of return. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.